Welcome to this episode. My name is Stephen Hollander, or welcome back if you're already subscribed. Earlier on, I spoke about the importance of having a long-term plan, and during that discussion I mentioned trading rooms. And when I say trading rooms, obviously I mean online trading rooms where you can log in and follow somebody trading live. You can follow an experienced trader and copy all his trades. But let me just make a distinction here, because some people run trading rooms only to show how they make their profits, but you're not actually learning anything. And other people do this to demonstrate a strategy, how it performs and how you can make it work. To copy a strategy, it needs to have a well-defined rule. Sometimes they simply call this mechanical entry, because you have a predefined set of criteria to tell you when to or how to enter and exit. There's no reason to copy something random where you don't understand what is behind the trades. When I was starting out, I had an idea in my mind and I decided to find real traders to learn from, because I was new to all this, and I found this trading show in London. So I booked an afternoon seminar where two hosts offered to teach us a strategy, and this was actually the first time I ever heard about Gann. And looking back on it, I'm a bit skeptical now because the young Gann contradicts the old age Gann when it comes to day trading, intraday trading. We all know that story where Gann performed trades in front of a journalist, but when you look at the old Gann, what he said, his advice is how he traded, it's quite a different story. When you hear mechanical entry, you might think, yeah, you just repeat the same thing over and over like a machine, and I wish it was all that simple. After that seminar, we could also follow the hosts trading live for a few months, because they had this online trading room, so I would sit there every morning waiting for this strategy to be used. I would just be sitting there at the London Open every morning, waiting for one of the hosts to call out this opportunity, enter the trade manually, and then I would just set my take-profit order. So you would think I lived happily ever after. But obviously they didn't just trade this one setup, because it didn't come around every single day. So what happened? Unfortunately, I couldn't follow any of their other setups. And why? There were a lot of reasons. First of all, the spread, especially during news announcements. As you can imagine, the trader called out the opportunity, entered the trade, and by the time I had the chance, he already closed it. Or sometimes I got stopped out, I was lucky to break even, but they still made a profit. Or they would just take half the position off when I was sitting there and I had to close it because it was the smallest lot available that I could even trade. So to make this long story short, I was all over the place and I didn't really understand why this was happening. One thing was the fact that they obviously traded a large account, not tiny fractions of a lot, and they tried to go around that problem, opening small, trading smaller accounts, but it obviously didn't work because it wasn't small enough for me. And also I had to conclude that because it was my only tool, this little strategy was my only tool, I was coming in with huge expectations. But for them it was just one single tool in their whole arsenal, which I knew nothing about. Just to make it clear, I'm not trying to discourage anybody from joining a trading room. That's not my point here. It's all about thinking about a longer term plan, as I explained earlier on. And the other thing you might want to ask, does this mean that they just sold me a fake strategy under the name of Gann like other people do, and it didn't even work? I wouldn't say that. Obviously I can't prove if Gann ever used it, but there's a logic behind this trade, and this was there when Gann traded. He talks a lot about supply and demand, And to understand this, you need to understand how the biggest financial institutions trade. It's not like they can just go into the market. They can't just buy or sell. They also need to create the liquidity to make it possible, because supply and demand is all about, if nobody wants to buy, you can't sell. Remember how many times you jumped into the market but the price just turned around on you? People love to use these big words like liquidity without really saying anything, without really explaining them. So what does it mean? I didn't understand it. The story about it is a bit funny, because if you're in England and you like sports, you are very lucky. You can bet on sports events endlessly because your profits made from betting are always tax-free. So betting is very, very popular. Very popular. But here comes the best part. You don't just have betting offices where you can bet on the events online or offline. There are also betting exchanges online. And on these exchanges, you can take both sides of any bet. This means you can bet on an opportunity to happen like you would normally do. For instance, you put money on a horse to win a race. Or you can also choose to bet on that horse not to win the race. Why is this important? I think you get it now, because it's very similar to going long or short. And the exchange makes money on you on the spread between the buy and sell prices, and obviously they charge commissions, so just like a broker would do. But most importantly, and this is the best part, on the exchange you can see the order book. So this is where I understood liquidity in the markets. You see plenty of very small orders, fractional amounts changing hands, and there's really nothing's happening. The price is not moving anywhere. And then all of a sudden a huge order comes in, which moves the market in one direction or the other. And obviously don't take this like I'm encouraging you to bet. It's just an example. I mention it because you also need to realize how similar this is, how Gann traded, how people traded the markets without charts, just in those days, just seeing the numbers. They only saw the numbers, the ticker tape and the numbers on it. And I want to give you something positive for a conclusion. I hope you understand that if you go into a trading room, you will rely on somebody else. This is my biggest issue with any type of trading room. You'll have no judgment of your own, no plan of your own, because you follow somebody else. And as I said, some people are legendary traders, very good traders, but they are very bad teachers. They have no skills how to teach. One of the hosts of that trading room was Dr. David Paul. He was a great personality, and he had some very good advice. He kept saying, "Before you open a position, stop and think again. Then, instead of entering the market, you should place your entry where you wanted to place your stop loss, and then watch how many times the market will go there and hit that price and then turn back." And I'll just leave you with that advice. This was Stephen Hollander. Thank you for listening, and feel free to follow my channel.